What's good, my fellow stock market trader and investor homies? It's your boy Kevin. Welcome back to the channel. Gonna do a little bit of a live stream today, see if we can maybe catch a trade here live on the channel. So we had some big news with the Fed this morning. We had the jobs report come out and the market reacted favorably. If we go look at a chart here, the market's gapping up a little bit this morning. Find the SPY. We can see Tesla. It's up a little bit from yesterday's close. The SPY jumped up a little bit. It's given most of it back. I think this jobs report was absolutely terrible, personally. And let's talk about why I think that. We heard Powell yesterday, or a couple days ago, say that he thinks he's probably going to have to jack up rates higher than initially expected, which is obviously bad for the market. And, you know, he said it was maybe going to shock the economy a little bit, aka shock the economy into a recession. So let's see what this jobs report said. So the February jobs report, Blast Street forecast. So the jobs report, the jobs numbers were actually pretty good, but that's not good, because if the economy is still doing well and Powell thinks that the economy's still booming, right, he's going to feel empowered to continue to raise rates. He's going to feel like he has the ability to continue to jack up rates. So the U.S. economy added another round of stronger job increases last month, the Labor Department said Friday, adding further evidence to the Fed's concerns that red-hot labor market will continue to stoke inflation pressures. So like I said, Powell's going to feel like he has the ability to continue to raise these rates. As long as these jobs numbers, there's not a ton of unemployment out there, he's going to feel like he can continue to raise rates. The Bureau of Labor Statistics said 311,000 new jobs were created last month. The Wall Street consensus forecast was 205,000. So there was more than 105,000 more jobs added in February than Wall Street anticipated. If that number came in, let's say 100,000 new jobs, I think the market would absolutely be exploding right now, because investors know, sharp and smart investors know, that in order for the Fed to back off these rate hikes, the economy's got to slow down before that happens. Private payroll were up 265,000. The Bureau of Labor Statistics said, again, topping street forecast, as the unemployment rate bumped up to 3.6%. I think we're going to need to see that number edge towards 5% before the Fed starts to slow down on the rate hikes. All right, so it also revised its January jobs addition estimate only to 504,000 jobs from its original estimate of 517,000 net gain. So we went from adding 500,000 jobs in January to 300,000 jobs in February. That slower increase may be in part due to, in January, you still had some seasonal hiring possibly. And let's talk about the monkey in the room, the elephant in the room. The CME Group's FedWatch suggested 60.2% chance of a 50 basis point rate hike. So the market's already pricing in that 50 basis point rate hike on March 22nd. But it was up at 80% earlier in the week. So if we don't get that 50% basis rate hike, the market's going to pop. We're going to see a run up in the market if we don't get it. If you only get a 25% basis rate hike on March 22nd, we are going to see a pop in the market. If we do get the 50 basis point rate hike, we probably will see a little bit of a sell-off, but the market's already anticipating that 50 basis point rate hike. The only way we get a catastrophic collapse I think, is if the Fed really goes extreme and we see it like a 75 basis point, which is very, very, very unlikely. So that's the Fed news this morning. I don't think it's good news. I was hoping for a little bit more of a slowdown in those job numbers, but it is what it is, and we just got to play it like that. All right, so let's see what's popping off this morning, see if we can possibly get into a trade. We got this running the top runner of the morning, ORTX, only 2 shares of volume, so that's off the list. We have BNED, Barnes & Noble, probably not going to be trading that. Silvergate, damn, Silvergate, that's crazy, right? What's going on with Silvergate? Absolutely crushing the crypto market. We'll probably touch base on that. Crypto right now. Woo! Silvergate absolutely decimated. All right, so not much really popping off this morning. It's a Friday morning, but we'll still try to get into a trade if we can. All right, let's pull up the chart, see what we got going on here. Tesla is probably going to be my main watch. It gapped up a little bit early in the morning. Has given it a lot back. We do have a big runner from yesterday. This OCEA had a monster move yesterday. Great continuation throughout the day. If we look at a 5-minute chart, this thing was absolutely screaming all day long. OCEA, Ocean Biomedical, it's a biopharma stock, had news regarding one of its drugs, and it went nuts yesterday. So we'll keep that one on watch. I'll set an alert if we get a breakout over yesterday's highs or a sell-off. Want to be able to pop in there and trade this guy again. Caught it a couple times yesterday. All right, so we got a couple of them on watch. Talk about Silvergate. Not going to be touching Silvergate, but I think this is really bad for crypto. There's really nowhere for these crypto companies to bank, and it's just a bad look, right? All these companies failing. Just a month or two after FTX, you have this Silvergate collapse, and it's really bad for crypto. Take a look at Bitcoin, back down under 20,000. You know, they say buy when others are fearful. Well, now would be that time, because just in a couple days, you go from 20,300 all the way down to 19.9. Or no, that's a 5-minute chart. We went from 21.75 down to 19.9. So a pretty substantial collapse here in the crypto markets, falling on that Silvergate news. So not going to be trading Bitcoin. Let's look at the overall market. The overall market, it's really inconsistent, chopping around the last couple of weeks. We have seen a sell-off. 418 was the high right there. Sold back off. Right now we're in 390s. That's basically due to the Fed, right? The Fed holds all the cards right now. The Fed holds all the cards. You really, if you want to be trading this market actively right now, you have to be paying attention to the Fed. You got to be one step ahead of the Fed. What are they going to do on March 22nd when they release what they're going to do? Are they going to raise it at 50 basis points? If you think they are, then you might want to stay out. If you think they're going to stick at 25, which I don't think they will, then you probably want to be buying. But that 25 basis point, there's probably a 45% chance it's only 25 basis points. If that happens, the market's going to pop. So if you're a gambling man like myself, there's probably more upside than there is downside right now. So you could be buying stocks that have a high beta, like Tesla, like Nvidia, like Apple, like Amazon, and turn it into a little bit of a swing trade, banking on that 25 basis point hike. So that's something I'll be keeping my eyes on. We got about 4 minutes to the bell. watch list is right now Tesla, OCEA. See what Nvidia's doing. Nvidia has been really strong. Still up at the highs, the recent highs, when the rest of the market has kind of given back off those recent highs recently. So Nvidia, you know, if it can get over this 240, 238 area, be interested in that. So about 3 minutes to the bell. Guys, how's the stream? Is the stream blurry? Can't really tell because it's lagging here on my YouTube. Let me know in the chat if you could, somebody, if the stream is messed up or is it crispy clear. Let me know. Bed Bath & Beyond, not touching Bed Bath & Beyond. It's going to be delisted here, probably. Yeah, it's going to fall under $1. It's going to be delisted. Let's see what they're saying. Yeah, I wouldn't buy Bed Bath & Beyond with your money, let alone my own money. Mullen, we got some headlines on Mullen. You know, I like Mullen. I like Mullen long term if it can survive. I think it's 50-50 whether it can survive, right? I think in 5 years it's a 50-50 shot whether Mullen is still around. But the upside is greater than the downside. You can only lose 100% of the money you put into Mullen stock. But the upside on Mullen is probably, you know, 300, 400, 500%. So I do like it. They're going to have to do a reverse split or something, or they run the risk of getting delisted. So they're going to have to figure that out here. There is talk of it possibly getting delisted if they don't get it back above $1 per share. So they're probably going to end up doing a reverse split here in the next couple of weeks. So typically when you get a reverse split, there is a pop over the next couple of days. It doesn't really make sense from a fundamental standpoint, but it usually does happen. It attracts traders, and you typically see a move after that reverse split. So keep your eyes on Mullen. Silvergate's popping off. I really don't want to trade it, but if it's the only thing moving, we might have to. What are you guys trading this morning? Only 11 of you guys in here. Anybody trading anything? What are you guys watching? All right, we're live. The bell is dinging. We are live. Tesla selling off a little bit. See what this OCEA is doing. Not doing much. See what the overall market's doing. I hide my face so you guys can see what I'm doing. AMD and SPY. Yeah. All right, so we're selling here at the bell. Move myself over here. All right, so we're selling a little bit at the bell, the SPY. Testing these recent lows here. The trade I usually like to take is a morning reversal, right? Oftentimes, you'll have traders jumping in, looking for the breakout early morning. The market jukes them out. You know, you'll break through those lows, stop out a bunch of traders, and then throughout the rest of the day, you get a rally back up. You know, that's counter trend trading. You're gonna make money probably more than you lose money, but when you lose money counter trend trading, it's typically a bigger loss. You know, you don't have that good risk to reward ratio, but you have a better accuracy. So I do like to counter trend trade, but it's not a beginner strategy. It's not something you want to do if you're just starting out trading. But I do. You know, that's my go-to, the counter trend. We got Tesla stronger than the overall market. Tesla's up 1.5%, while the overall market is in the red. See if there's any news. Just more talk of them cutting their prices. I may look to get short here. See if Tesla wants to cooperate. I'd like to see a break over this level here. Breakout traders jump in. I get short. Look for a quick, flush. Evan, you just sold some puts. Tesla? Now Tesla's starting to sell. SPY puts. Well, you probably did pretty good this morning and yesterday. Yeah, the market puked yesterday. Nice, 110%. 110% on the SPY puts. Hell yeah, dude. We're wanting to break through these lows. All right, now Tesla's puking. So we got that. Look at that trend line. Look at that trend line reaction right there. Shows you that your stuff is valid when you get those kind of interactions. I don't even know when that's from, but let's back off and see when it's from. Here we go. Tesla's puking. Now I'll be looking at the long side if we can get under. Yeah, I'm looking possibly at. I was looking at puts for Tesla, but I was too late. It's already puked. It's already flushed. I'm not going to chase it. So I'll wait. I may flip that idea and buy some calls now because I don't want to be buying puts after it just dropped. Probably it was up 1.5%. Now it's down 0.8. So it just dropped 2% in a few minutes. So I'm not gonna get short this thing after it just dropped 2%. I'm not planning on this being down 5% on the day. It may very well, but I like to trade chop. I like to trade back to the mean where you get a quick flush, right? And everybody's freaking out. They're thinking to themselves, oh, we're going to have a huge red day today. Typically, you don't have a huge red day or a huge up day. So if you get a quick early morning pop to one direction or a flush to the downside, I like to trade it back to the mean, trade it back to VWAP. Sometimes it works. Sometimes you get stuck holding the bag. You got to be really quick with risk management and be able to cut it. Yeah, no problem. So I wouldn't touch this. Probably won't touch it until we get under 169.50. Then look for a pop back up. We'll see. Silvergate, it was up 20%. Now gave it all back. Silvergate really screwed over the crypto market. What do you guys think about crypto? Do you think it can survive? It seems like all these companies that were even seemed legit. I wasn't buying the 20% APY on these stable coins. I wasn't buying that. But a company like FTX, they had the Miami Heat Arena. They were a big deal. They had big money behind it, and even they failed. So what is a little company? How does a little company not fail? It's scary. Scary. Silvergate was a monster. Silvergate was an absolute monster. They fail. Scary stuff. If this OCEA can get going, we could have another monster move. There's some shorts stuck in this thing. There's some shorts that are crapping their pants. They got Dookie in the diaper because, they got in yesterday. They got it short here. They got short here, looking for the rollover. And that's a valid strategy, shorting these big runners. But, if this thing really starts to take off and traps the shorts, I would not want to be short. Yeah, I agree. 98% of crypto will die. But it's that 2% that is really going to change the game, that would be nice to have some exposure to, but you got to wade through the shit to get to the diamonds. And that's the tough part. Where do you find the diamonds in the crypto market when 98% of it is straight dog shit? It's tough. Yeah, it is fun. Yeah, I've traded it the past 3-4 years. I've been trading crypto a lot, but right now, I've been saying it, and it really hurt my channel, me being honest about my opinion, saying that I thought 98% of crypto projects were going to fail, and it looks like that's coming true. But it is fun to trade, and I'm a believer in the blockchain tech. I'm a believer in not so much Bitcoin. I like Ethereum more than Bitcoin because it's more active. It's an active project. They're improving it, and I think it has a ton of potential. But it is scary seeing companies like FTX and Silvergate fail. People lose tons of money. People losing their life savings. That's messed up stuff. You know, you work, you save up, say you're 50, you've saved up $150,000 in your retirement, you throw it in a crypto project, 2 years go by, you're back at square one. That's not fun. If I knew Tesla's selling here. If we had gotten those puts, we would be getting paid, folks. We missed the puts. We're not going to chase. See if we can find a place to look for a rally back up towards VWAP. The VWAP's up at 172.40. Yeah, FTX set the crypto markets back years. Literally set the crypto markets back years. We were so close. Crypto was so close to being mainstream and having your mom and pop, grandma investing. And that's when it really takes off. That's when Bitcoin hits 70,000 is when grandma and grandpa feel comfortable investing some money in crypto. When your pension funds are starting to buy a little bit of crypto. When these hedge funds are buying a lot of crypto, that's when Bitcoin hits maybe 100,000. And I think we were close to that, but FTX set us back. If a pension fund says now we're buying crypto, the investors, the pension holders are going to say, wait a second, what about FTX? What about Silvergate? So, yeah, I think we've been set back. But a purge needed to happen. It was the wild, wild west. A purge had to happen. We had to have a reset. We had to have the fake projects get annihilated and the real projects suffer a little bit. But the real projects that actually offer something of value will survive. And it's probably going to end up being good for crypto as a whole. Grandma and grandpa can barely text. Yeah, but grandpa and grandma got that. They got that cheddar. They got that cheese, that guap. And grandma and grandpa have somebody who's managing their retirement fund, right? I'm not saying grandma and grandpa are going to pull the trigger themselves. They're not going to be putting the buy order in themselves. But whoever's managing their money will say, hey, look, crypto's safe now. It's not 100% safe, but just as safe as putting your money in stocks. So let's buy 3% of your investment allocation into some crypto. And grandma and grandpa say, yeah, let's do that. And that's when crypto hits 50, 60, 70, 80,000. But that got set back. Eventually it'll happen. I do believe eventually it'll happen. Crypto Zoo. Shit, CoffeeZilla. CoffeeZilla went on Joe Rogan. How about that? Hell yeah, good for him. Good for him. Crypto Zoo. Yeah, I mean, come on, dude. I feel bad for those people. I feel bad for the Crypto Zoo folks, but you're buying a Logan Paul. What do you think? Logan Paul's in the lab dialing up a crypto that's actually going to be successful long term? No chance. I get maybe if you can get in, you can get in early. You got to in, and you can get in early before the you can get it on like a pre-sale or something like that. I get that. And you sell it into the pot. But actually thinking that Logan Paul's going to be successful long term with the crypto project? Nah, man. Yeah, I still feel bad for those folks, but come on, dude. There's no way their financial advisors would recommend high risk allocation. Right. Yeah. But is Bitcoin that much different than Tesla right now? Look at Tesla. It's off what? You bought at the top, you're down 50%. So it's definitely more high risk. But if you had an advisor say, hey, put a percent in, put a 0.5% into the crypto markets, I don't think that's extremely high risk. Now, it's throwing your whole, retirement into crypto, obviously, is not what you want to be doing probably, but I don't think it's terrible to throw 0.5% of your investment allocation in there. You should post regularly again and voice your honest opinion on the market. Yeah, I'm planning on getting live here at least 3-4 times a week. Trying to get more regular. And people to get mad at me. My channel really took a licking with AMC. But everything I said ended up being true. I said AMC was going to crash and people were going to lose their ass. And that's exactly what happened. And the guerrilla army got really pissed at me. But, I'm always going to speak my mind. I'm always going to speak my mind. We got Tesla selling here hard. Tesla selling. See if we can get in here somehow. No news? Just that news? See, I really was short. I had a short thesis this morning because of that jobs report. I just missed the boat trying to get this live stream set up. First live stream in a long time. Missed the boat, but it is what it is. There'll still be more trades to be had. So the market is such a little conniving little son of a bitch, right? This morning it's saying we're going to pop. It's saying, well, we like that jobs report. We like that jobs report. It jukes people out. Then in reality, the jobs report was terrible because it gives Jerome Powell the conhuevos, the intestinal fortitude to continue raising rates. Yeah, I'm still considering buying some calls on Tesla. I don't want to wait till it buys back. I want to scale in while it's dropping. See, it's wicking up here. It's back above this area. If we make a new low, I'm going to jump in with some calls, scale in, see if we can get a reversal back to the mean. We got another trend line right here on Tesla. It comes into play about 170 or so. And I think it's going to be hard for Tesla to get back above it. So I want enough room on this trade if we do buy calls to where, say for example, we get one of these, we break down here. To where if you buy right here, there's enough profit potential for a move just back up to like right here, right? Because I'm not trying to hold it to get back up towards highs. That's not what I'm doing. It's more so like a scalp trade than a all-day swing. I want to see a break back on your lows. Jump in with some calls. Right now, I'm messing with the 170 strike price. I'm going to change that. I like to buy right at the money. So I'm going to go the 167.50 strike price, expiring next Friday. I don't want to be messing with the contracts that expired today. What do they call those? We're getting a little bit of a pop. See if this OCEA is doing anything. It was just chopping around. Probably no volume. Let's look at the volume. So it's traded 2 million shares of volume. but you can see the order flow. If you're ever considering trading a small cap, you always got to look at the order flow, not just the volume. That volume of 2 million could just be a couple big short sellers covering their position. But look at this order flow over here. Absolutely nothing. There's no order flow coming in at all. It'll be one order for 100 shares, another. Very, very little volume coming in. See what's going on. Pull up FinViz, see what's popping off. It's Friday, it's a little bit slow. Order flow does not necessarily affect stock price. Well, obviously, volume affects stock price. But if there's no volume, the stock doesn't move at all, right? If there's no volume, the stock just sits still. Look at Tesla. Look at Tesla's order flow over here. Just like a machine gun, right? Tons of volume. If there's no volume, the stock just stands still. If they're selling, the stock goes down. I don't use the order flow to dissect if it's buying or selling coming in, because you don't know. There's too many ways for people to send orders to where it doesn't show up on that. You know, they can send it to dark pools, stuff like that. But when you're trading small caps, you definitely want to check the order flow to make sure there's enough volume for you to get in and get out. And if there's no volume coming in, the stock's probably not going to do much. So it's really not worth messing with getting in if there's no order flow. That's what you want to see right there. What Tesla's order flow looks like. How quick it's moving. That's good volume. Obviously, it's already done 32 million shares of volume. Doesn't necessarily need to be that quick. But if you go back and look at this other one that popped off yesterday, this OCEA, no volume, absolutely nothing. Then you look at Tesla, just out of control. So when a penny stock or a small cap picks up volume, it'll look like what Tesla looks like. So Tesla popped back up. You know, both of our trade ideas would have worked out, but hindsight is 2020, right? Yeah, definitely the hard part getting in the trade. Easy to look at a stock chart at the end of the day and say, oh, that's where the right price to buy was. That's where you should have sold. Definitely easy to do that. Hindsight is always 2020. Yeah, always more difficult to actually pull the trigger at the right spot and then jump out at the right spot as well. This BNED looks like it's jumped up a good bit here in the last few minutes. It's at Barnes and Nobles. I won't be trading Barnes and Nobles. I wonder if I have shorts. We do have shorts available on Webull for Barnes and Nobles. What's the news here? Better than expected quarterly sales. Bet you anybody want to take a bet whether Barnes and Nobles will still be around in 10 years? Because I'm saying no. TENX. Another biotech. Penny stock. It's only trading at 48 cents. Not doing anything today. Sold off over the last couple of weeks. I'm not interested. So, in order for me to get in a trade in Tesla, I would need to see it probably break above this level for a put, a short options trade, and I would need to see it break below lows to get long. Yeah, Evan, I like to trade stocks and options. Why? Because futures, I've never really gotten nothing against futures. I like to trade, the indexes. I like to buy options on the SPY, but I've never gotten into futures trading. I like to trade stocks because it just makes sense to me. I've been doing it for 9 years now. Absolutely love the markets, and I've found consistency in trading individual stocks, trading the SPY, the triple Qs, but I've always been interested in futures and just never got into it. I don't really just see if you're bullish on the market, why not just buy SPY or buy SPY options? In futures, you got to go get a different broker, all that stuff. Maybe one day. Any news popping off? Friday slow. Rivian. What do you guys think about Rivian? The plant's about 15 minutes from my house that they're building here in Atlanta. I'm not very high on it. Supply chain issues with Rivian. I just think it's too expensive. The baseline vehicle is too expensive, and there's not enough consumers who are going to be willing to spend $100,000 on an electric truck. Just my opinion. See what it's doing today. Doing just the same thing the overall market is. All right. We may have something going here with Tesla. Yeah, I think Tesla wins too. I think Tesla wins. They make money on their cars. They have the infrastructure, the manufacturing infrastructure in place, which is the hardest part, right? They have it in place and they do it at an extremely high level. Rivian, these other companies trying to get involved, it's almost impossible, right? It's almost impossible. Rivian is losing tons of money on every vehicle built. Yeah, absolutely. The company is doomed. The company's in big trouble. It had some big names come in and invest. All right, guys. So the chat looks like it's messing up a little bit. I'm going to hop off. I'm going to be going live. Try to be going live at least 3 or 4 times a week, doing some live trading. Try to get in a trade today. Didn't work out. You know, you don't trade if it's not there. So we'll be doing some live trading next week. Hopefully we can do one every day. That'd be good. I'll catch you guys next week. I love you guys, and I'll catch you in the next video. Until next time, peace.